Hello, this is Datatraderpro, Friday, September the 9th. This is pre-market, so it's before 9 a.m. Yeah, just a very brief morning wrap. We haven't done one of these in a while. The market has been frustratingly slow for most traders for, well, at least a month, probably coming up on 2 months now. We've had the tightest range in the S&P in roughly 60 years, 9-week period of roughly 1% total range. So yeah, it's been hell for options buyers. Premium has been sucked out of both calls and puts expertly. We've really gone nowhere after breaking out to a new high. The market's been parked high up against resistance, been unable to break down, been unable to break out, and it's frustrated a lot of traders. So we seem to finally be getting the start of a move, it looks like, in the downward direction. It started yesterday. And let's look at that. Okay, so basically in terms of internals, our dollar weighted chart yesterday trended negative all day. The MCC, which is our version of the intraday McClellan, was negative but not heavily so, and you'll see that also in breadth. The low of the day on NYSE and NASDAQ advanced declines were very muted. Not a strong, not a powerful down move at all. In fact, the volume delineator on NASDAQ was positive for much of the day. So that's how weird things have gotten, that on down moves, nothing's really getting sold heavily, nothing's getting bought heavily on rallies. It seems like we're just bracketed on the market for quite some time. Let's go to volatility. We actually started to finally get a volatility move. Now, 2 days ago, we noted that VVIX was elevated. It's been roughly up 2% for the past 2 sessions, yesterday and the day before. And that will often tell you, volatility got so beaten down that it was, down far from its normal range in terms of where we are in the VIX expiry. We're roughly, VIX OPEX is September 21st, so it's actually after regular monthly OPEX and all the futures expiring on the 16th. So we actually have almost 2 full weeks, 2 full trading weeks left, roughly, of the front month VIX. And it got down to a low of 13.15 yesterday. So when volatility is that beaten up with still 2 weeks, roughly mid-cycle, 2 weeks to expiry, anything can happen. I mean, there's a lot of room. The norm for 2 weeks to expiry on front month is somewhere, well, norm. Volatility has been beaten down so low lately, it's hard to find a norm, but what would be normal is the 15 to 17 range. And anything under that, you think the volatility is underpriced for a potential move that could happen in the next couple of weeks. So it got down to 13.15. We saw VVIX hold steady green for the last couple of days, and that was a clue that volatility was going to start to make a move, and it has. So volatility was up, VIX was up as high as 8% yesterday. VXST, which is the 9-day version of the VIX, was over 10%. So the starting of a move. Really what tells the tale, though, is the block trades. So we had gotten up high. We made our new all-time highs on SPY. We've retested them a couple of times, but we kept getting these late sell prints, these 501,000 share sell prints every time we got up high. There was just a wall of sell prints. They bought it back up, and there was just more and more sell prints. So what that did is that created a wall of resistance, right? 219.05, they're all around this. 219.09 was the highest we saw, and that basically this giant wall of resistance that are sell prints. But if you add these up, there's millions. I think there was something like 20 million shares, over 20 million shares of SPY sold at the top. So basically we've gone up, we've back tested these, and it's failed, and we've dropped, and here we are in pre-market down in the 217s. Okay, same thing with QQQ. Lots of sell prints. Certainly less than SPY, but plenty of sell prints. QQQ doesn't get block traded in the quantities that SPY does. SPY is the main instrument as far as that. Actually, IWM usually gets more block trade volume than QQQ. Also, sell prints. 125.41. I'm sorry, I forgot to note the levels on the Qs. 117.92-93 level on Qs. 125.42 on IWM. We even got a Dow DIA. This doesn't get a lot of block trades, but I just put it up there for confirmation. Basically, you can see somebody bought 250K here, sold it up here, made a cool 300K. Thank you very much. See you later. And they sold right near the highs, right? So the high was 185.36. They sold 185.30s. Okay, so someone made a couple of bucks there. All right, volatility, exchange traded products is VXX, some accumulation on the recent low, more prints here. Nothing huge though. We haven't seen big prints. Back here we saw something decent, but nothing in the millions on this bottom, which is a bit peculiar. Some reasonable size UVXY 550K print, on the recent low. Good. That was a nice buy for somebody. XIV, some sells on the way up, but no big prints at the top, so we'll have to keep an eye on that. But we're above, on VXX, we're above this big print. We're above the bottom, certainly. Volatility seems to be making a move, and there we go. So basically, our main message for today is watch any retraces. If we go back far enough, so 217.46 roughly, we're below that now, is also going to be a line of support and resistance. So on any retraces back up, if we get back above here, we have a chance to run back up and test some of these levels, the mid 218 levels, and certainly that's our wall of resistance. But if this holds and we can stay under there, then there's quite an air pocket below, which I'll show you on our volume profile chart. This is a volume profile chart of only the largest block trades, cumulative over 6 months. So we've taken the noise out of volume basically, and taken all the little players out, and are just looking at support and resistance levels basically on large institutional trades, because we believe that that's the clue to the market, that the large traders, large institutional money, big trades move the market. So we came off our high. We're certainly down well, but you see the last line of big volume on block trades is at the 216 level. If we can get below that, then it really thins out tremendously until you get into the 210.50 zone. That's a big drop, obviously, but after this 216, 215 level, there is an air pocket. And there isn't really a ton of support until you get back into the 210.50 or even 210 region, roughly 2100 SPX or ES zone. So futures are rolling yesterday and today. The majority of volume on the index futures will have moved over by the end of the day today onto the December contract. Usually futures roll is a volatile period. We may just get our correction during futures roll and then go back up, or this may be the start of something bigger. We hope it's the start of something bigger, because I think the overall move has been unhealthy because it's lacked any significant pullbacks. And there hasn't been any fuel to continue higher. So, if the bulls are really wanting to bust the indexes out to new all-time highs, they're going to need to put some fuel in the tank, and that usually comes from a move lower, accumulation, and then back up. So, these are your levels to watch, really. If we can get through 216, then we could have a flush down, but we'll see. Again, watch the block trades, watch volatility to continue rising, and then we should get that move. Otherwise, we're still stuck in the doldrums we've been in for the past 5 to 9 weeks, roughly. Okay, so that's our message for this morning. Happy trading, and join us next time. Thanks very much. Bye.